Hi guys. Today we will analyze Clorox stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Clorox is a bad performer in the overall market, and both the medium and short-term pictures are negative. Long-term trend is negative as well. Support level is around $138. The next support level is around $110. Resistance levels are around $160 and $165. The next resistance level is around $186. In the last month the stock has been trading between $138 and $186 range, which is wide. It is currently trading near the lows of this range. Prices have been falling strongly lately. It is better to avoid new long positions here. Volume is considerably higher in the last couple of days. In combination with a strong move down, this is a bad signal. The stock has an average volume of 1.5 million. This is a good sign, as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 4% per year, for last 5 years. Also we see that the average profit margin of the stock has been around 12% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 128% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Clorox Company: bad, average, and good. First scenario. Clorox will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 2%. Future profit margin would be low, 1%. Future free cash flow to net income rate would be low, 90%. In this case, the fair value of the stock today would be $67. The second scenario. Clorox will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 3%. Future profit margin would be average, 2%. Future free cash flow to net income rate would be average, 95%. In this case, the fair value of the stock today would be $131. The third scenario. Clorox will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 4%. Future profit margin would be high, 3%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $207. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 1.99. Minimum rate of return. I will use 12%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Clorox, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 40. Again, I will use 3 different scenarios for Clorox Company: bad, average, and good. First scenario. Clorox will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 2%. Future P/E would be low, 30. In this case, the fair value of the stock today would be $26. Second scenario. Clorox will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 3%. Future PE would be average, 40. In this case, the fair value of the stock today would be $37. Third scenario. Clorox will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 4%. Future PE would be high, 50. In this case, the fair value of the stock today would be $51. As you can see, today the stock is overvalued, $143, even if we expect the company's high performance in future. The company's revenue has fallen from peak levels with sequential declines in 5 of the past 6 quarters. The company's growth expectations for 2022 are low, and the stock is currently overpriced. The company is a dividend aristocrat. A dividend aristocrat is a company that has increased its shareholder dividends every year for at least the past 25 years. I may consider buying the stock for the dividend if the stock drops below $120. Company's strengths. Clorox is a diversified provider of cleaning, household, and lifestyle products. Its revenues are divided into 4 operating segments: health and wellness, 31% of sales, household, 31%, lifestyle, 17%, and international, 21%. The company has strong product portfolio, brands, and long history of dividend hikes. Clorox is a dividend aristocrat. The company has increased its dividend every year for more than 25 years, and has raised its payout at an 11% compound annual rate over the past 6 years. At current prices, the shares yield about 3.3%. The company has been broadly recognized for the effectiveness of its management team and emphasis on corporate responsibility. Risks. The company's revenue has fallen from peak levels during the early months of the pandemic, with sequential declines in 5 of the past 6 quarters. Over the near term, it's expected to see continued gross margin pressure and volume sales continuing to moderate from the height of the pandemic. The company is carrying elevated inventory, which is being recorded at a much higher cost. It's experiencing negative mix from the reintroduction of multi-pack products, and it continues to experience high input and transportation costs. The company's growth expectations for 2022 are low. Don't be surprised to see Clorox's lower guidance in future periods. It could take a few years before Clorox returns to pre-pandemic earnings. The revenue is expected to grow by 3% on average over the next 5 years. In the next 5 years the EPS growth will be less than in the last years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.